Global Monetary Watch, July 30th, 2026. Something important is drawing attention in the Iraqi currency story today, and it comes down to a piece of economic information that can easily be misunderstood if it is viewed without context. The focus is the real effective exchange rate, commonly known as the REER, and its relevance to the Iraqi dinar. This is not simply another headline about the number of dinars exchanged for $1. The REER is designed to provide a broader measure of a currency's position by considering trade relationships, inflation differences, and purchasing power. Understanding what this indicator actually represents is essential before drawing any conclusions from it. The first thing to establish is what the real effective exchange rate does and does not tell us. A standard exchange rate gives us a straightforward comparison between two currencies. For example, it can tell us how many Iraqi dinars correspond to $1 at an official rate. The REER takes a much wider view. Instead of comparing the dinar against only one currency, it considers Iraq's currency in relation to a group of trading partners, and adjusts those comparisons for differences in inflation. This makes the indicator useful for economists studying whether a currency is becoming more or less competitive in international trade. That distinction matters because the REER should not be interpreted as a replacement for the official exchange rate. It is an analytical measure rather than a new banknote rate or an automatically established market price. When economists examine it, they are looking at the relationship between currency values, domestic prices, foreign prices, and international competitiveness. A movement in the REER can therefore provide information about broader economic conditions, but by itself it does not announce a revaluation, a redenomination, or a specific future exchange rate. Those decisions depend on monetary policy, economic conditions, and official policy actions. The attention surrounding this development comes from its timing. Iraq has been working through a series of financial and banking reforms aimed at making the country's monetary system more transparent and more closely connected with international financial standards. Over the past several years, authorities have focused on issues involving foreign exchange transactions, banking compliance, electronic payments, and the relationship between Iraqi financial institutions and international banking systems. Within that broader reform process, additional economic data can provide outside observers with more information about how Iraq's monetary system is functioning and how its currency interacts with the wider economy. The Central Bank of Iraq has also been dealing with the complicated process of improving foreign exchange controls and strengthening compliance procedures. This has involved greater attention to documentation, international banking requirements, and transparency surrounding dollar transactions. These measures are significant because Iraq's economy remains heavily connected to international trade and foreign currency flows. Improving the structure through which those transactions take place can affect banks, businesses, government institutions, and consumers. However, financial reform is rarely completed through a single announcement. It generally involves a long sequence of regulatory, technological, institutional, and administrative changes. Another important part of the discussion is the Iraqi dinar's official exchange rate framework. The dinar has operated under a managed exchange rate system, with the Central Bank of Iraq playing a central role in maintaining monetary stability. The official rate and the REER are therefore two different pieces of information. One describes the exchange rate framework used by monetary authorities, while the other provides economists with a broader measure of currency competitiveness. Looking at both together can offer more context than focusing on either figure in isolation. Inflation is particularly important when interpreting the real effective exchange rate. Imagine two countries whose currencies remain unchanged against each other while prices in one country rise significantly faster than prices in the other. The purchasing power and competitiveness of those economies can change even though the basic exchange rate has not moved. This is one reason economists adjust effective exchange rate calculations for inflation. The REER attempts to account for these differences and therefore gives researchers a more detailed view of the currency's position within international trade. Iraq's economic structure makes this discussion especially important because the country remains highly dependent on oil. Petroleum exports provide a major source of government revenue and foreign exchange earnings. That means developments in the international oil market can have significant consequences for Iraq's fiscal position and external financial capacity. Changes in oil prices, production levels, export volumes, and international agreements can influence government revenues and the availability of foreign currency. As a result, the Iraqi dinar cannot be analyzed separately from the country's broader dependence on energy exports. Oil revenues also have a connection with the central bank's ability to manage monetary conditions. Foreign exchange earnings from exports contribute to the country's external financial position. while reserves provide an important buffer for managing international payments and supporting confidence in the financial system. But reserves alone do not determine an exchange rate. Policymakers also have to consider inflation, government spending, imports, banking sector conditions, external obligations, and the overall balance of payments. This is why economists normally examine a collection of indicators rather than treating one statistic as a complete explanation of currency value. The Iraqi government's reform agenda is another major part of the picture. Authorities have emphasized modernizing the banking sector, increasing the use of electronic payments, reducing excessive reliance on physical cash, and improving the connection between Iraqi financial institutions and international systems. These changes can have practical effects throughout the economy. Digital payments can make transactions easier to track, while stronger banking procedures can improve transparency and compliance. At the same time, implementing these reforms across a large economy requires infrastructure, public participation, institutional coordination, and sustained enforcement. Banking modernization is particularly relevant because a currency system does not operate independently from the institutions that use it. Commercial banks, businesses, government agencies, payment providers, and households all participate in the financial system. If those institutions become more efficient and transparent, monetary policy can potentially operate through a stronger financial infrastructure. However, improvements in the banking sector do not automatically produce a particular exchange rate outcome. They are better understood as part of the foundation required for a more modern and internationally connected economy. There is also an international dimension to Iraq's financial reforms. Iraq interacts with institutions and financial systems outside the country, and international banks must consider compliance requirements when dealing with Iraqi counterparties. Strengthening transparency and improving regulatory standards can therefore make cross-border financial activity more straightforward. This is one reason international observers pay attention when Iraq introduces new procedures or publishes additional monetary information. Greater transparency gives analysts more material to evaluate, rather than forcing them to rely primarily on estimates, unofficial claims, or incomplete information. At the same time, it is important to separate measurable developments from speculation. Discussions surrounding the Iraqi dinar frequently involve claims about dramatic exchange rate changes, special rates, or specific future dates. Those claims should not be treated as established facts unless they are supported by official documentation from the appropriate authorities. A real effective exchange rate calculation does not itself establish a new exchange rate for the public. It is an economic indicator, and its meaning has to be considered alongside other data and official policy decisions. The current economic environment also presents challenges for Iraq. Political conditions can influence the pace of legislation and economic reforms. Infrastructure requirements remain substantial, and government budgets have to balance development priorities with ongoing public expenditures. Security conditions in the broader region can also affect investor sentiment, trade, energy markets, and government planning. These factors mean that economic reform is not taking place in isolation. Iraq's monetary authorities are operating within a complicated domestic and international environment where conditions can change over time. The global oil market adds another layer of uncertainty. Iraq's production and export plans are influenced by international demand as well as agreements involving major oil-producing countries. When oil markets are strong, government revenues can benefit, while weaker prices can place greater pressure on fiscal planning. For a country whose public finances are closely tied to petroleum exports, this relationship is extremely important. It means that analysts examining the dinar also monitor oil prices, production policy, export revenues, reserves, government spending, and other indicators that can affect Iraq's financial stability. This brings us back to the significance of the REER. Its value is not that it suddenly provides a secret exchange rate. Its importance is that it adds another layer of measurable information to the economic picture. Analysts can use it to study how Iraq's currency has performed relative to trading partners after accounting for inflation differences. When combined with other indicators, it can help economists evaluate competitiveness and monetary conditions. But interpreting the indicator requires caution because no single economic statistic can fully describe the health or future direction of an entire national currency. The broader reform process is therefore more important than any single data release. Iraq has been attempting to modernize financial institutions, strengthen compliance, expand electronic payment systems, and improve banking practices. These initiatives can take years to implement fully. Progress can occur unevenly, with some areas moving quickly while others encounter administrative or political obstacles. The most useful way to evaluate the process is to monitor actual policy changes, published economic statistics, institutional reforms, and measurable outcomes, rather than relying on rumors circulating through online currency communities. There are several possible ways Iraq's economic situation could develop, but none should be presented as a guaranteed outcome. Continued reforms could gradually improve the efficiency and transparency of the financial system. Strong oil revenues could provide additional fiscal and external support, while weaker energy markets could create additional pressure on government finances. Political or regional developments could also accelerate or delay certain reforms. These possibilities demonstrate why economic analysis should remain flexible. New information can change the assessment, and responsible reporting should acknowledge uncertainty rather than presenting one predetermined result. For anyone following the Iraqi dinar, the most useful information comes from understanding how these different elements connect. The official exchange rate, inflation, oil revenues, foreign exchange reserves, banking reforms, government finances, and international financial relationships all contribute to the larger picture. The REER adds another analytical tool to that collection. It can help explain whether changes in nominal exchange rates correspond with changes in relative prices and competitiveness. But it should be interpreted as economic data, not as a promise of what the dinar will be worth at some future date. There is also a broader lesson in today's discussion. Financial systems become more credible when economic information is available for examination and when institutions provide greater transparency about their policies and performance. Publishing useful economic indicators allows researchers, businesses, policymakers, and international institutions to make more informed assessments. For Iraq, continued improvements in financial transparency can be an important part of its broader economic modernization. The significance of today's development therefore lies less in sensational interpretations and more in what the data contributes to the understanding of Iraq's monetary and economic position. So, as we look at the Iraqi dinar story on July 30th, the central point is straightforward. The real effective exchange rate is an economic measure that provides additional context about the dinar's position relative to trading partners and inflation differences. It is different from the official exchange rate and should not be interpreted as an announcement of a new public exchange rate. Its usefulness comes from combining it with other economic indicators, including oil revenues, reserves, inflation, banking conditions, and government reforms. That broader approach gives a much more balanced understanding of what is actually happening inside Iraq's financial system. The coming months will continue to provide additional data that can help observers evaluate Iraq's progress. Official monetary decisions, economic reports, banking reforms, oil market developments, and government policy will all remain relevant. If new exchange rate measures or monetary changes are introduced, the most reliable way to understand them will be through official announcements and documented economic data. Until then, the responsible approach is to distinguish confirmed developments from speculation and to recognize that economic reform is a process rather than a single event. This is why today's REER discussion deserves attention without exaggeration. It gives us another piece of the economic puzzle, while leaving many larger questions dependent on future policy decisions and economic conditions. The Iraqi dinar remains closely connected to the country's oil-based economy, monetary framework, banking reforms, and international financial relationships. Understanding those connections is far more useful than focusing on isolated claims circulating online. As new information becomes available, the picture can be reassessed using the same principles, verified data, official statements, and careful economic context. You're watching Global Monetary Watch, and our goal is to keep the discussion focused on documented developments rather than rumors or unsupported claims. Today's update is ultimately about understanding what the real effective exchange rate measures, why the indicator matters, and how it fits into Iraq's wider financial reform process. There is no need to turn one statistic into a prediction. The facts are valuable on their own. As more official information emerges, we'll continue examining the numbers, the policies, and the economic developments that shape the Iraqi dinar story. Stay informed, verify the information you encounter, and follow Global Monetary Watch for future updates.